Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TS CCI Pro Traders. The title of the video is Learn to Master the CCI Indicator, Step 6. In this video, we want to talk about the best overbought and the best oversold CCI trading setups. All right. The CCI stands for the Commodity Channel Index. It is overbought when the CCI is above the level of 100. Okay. So if you have been watching this series of video that we call Learn to Master the CCI Indicator, step 1 to 6. By the way, this is the last video in this series of video where we are pinpointing specific aspects of the CCI indicator. Different trade setup, the best approach to trade the oversold, overbought CCI. What we need to pay attention to. What is the meaning of overbought? What is the meaning of oversold? What is happening when the CCI is overbought? All right, to make excellent day trading and swing trading decisions. All right. So this is step 6, all right? So at the end of this series of video, one will be able, to learn, to trade, the commodity channel index, the CCI indicator, like, a professional trader. I recommend to traders, to practice, use a demo account to practice, to learn, assimilate, everything we have said, and then put into use gently, all right? Until one has mastered it, and start making a better decision, all right. So what I need to clarify first to traders, the best overbought and oversold CCI will take place in a balanced market. A balanced market is a consolidation. But before you switch off and go, I encourage traders to watch the full length of this video, What I want you to clarify, because the overbought condition, you want to know when the consolidation market takes place. I will clarify a few things about the consolidation or the balanced market to traders. Usually, the consolidation will take place. All right, there are different reasons why we have a consolidation phase. But the first reason is that there is first, so the first condition that probably we have a high volatility period, price is in a declining channel, or price was in a rising channel. So usually when the price is in a rising channel or declining channel, very often, not always, you may see that the volatility will go up, in both cases, both cases, all right? So after the volatility has slowed down, we have a consolidation. So you want to understand why we have a consolidation very often. Price going down in a declining channel, and then price start going in a horizontal channel. High volatility, low volatility. This is one of the reasons why we have, the consolidation, market pattern. There is another reason, The second reason is that the price is at a key levels. So price going up, So you will see it going up very, very fast, and then price reaches a key levels, Or price going down, and price reaches a key levels. Because the professional, the hedge fund, the big institution are trading around key levels, they slow down. They want to watch what's happening. And if they want to buy again or sell, they will sell at the key levels. So sometimes the market is acknowledging a key level by oscillating. The price may oscillate around key levels. This is the second reason why we may have a balanced market or a consolidation. All right? So a consolidation can be either an accumulation, which means the big institutions are buying gradually. They are accumulating. They are buying bit by bit for a period of time, A consolidation can also be a distribution when the big financial institutions are selling gently, bit by bit, chunk by chunk, okay, over a period of time. So we want to know, is he acknowledging a key level, or is he a volatility slowing down for a while, okay? All right? There is another reason why we have a consolidation market. We also have a consolidation market when, all right, the market is expecting, okay, a high impact economy news. You'll see that very often in the first week of the month, when the market is expecting a major economy news, okay, you will see that the price will be oscillating, or the Federal Reserve is about to speak, or a central bank chairman or chairwoman is about to speak. A major economy is due, all right, the market may oscillate, the price may oscillate to, okay, acknowledge that, okay, something important is about to happen. So the volatility will go quiet. No one is going too wild, so the price is not going to run far, go everywhere. So it may consolidate, so we may have a balanced market. You may say to me, John, what that got to do with laying to master the CCI step 6? Because the best overbought and oversold CCI will take place, okay, in during a consolidation period. That's why we need to explain to traders when and where, okay, the consolidation will take place. What is the reason why we have the consolidation, all right? So that's why I'm trying to explain to you here, okay, the different reasons why we have the consolidation or a balanced market, okay? So 3 reasons can cause the price to consolidate, okay? But the bottom line when we are looking at consolidation is a low volatility period. So traders that are trading forex, for instance, may notice that during the Asia session, the price may not go too far away if we don't have major economy news during the Asia session, especially if you are trading forex. If there is no major economy news, the price may oscillate. This is also a consolidation. The number 1 role of all momentum oscillator, RSI oscillator, stochastic oscillator, okay, CCI oscillator or CCI indicator, is to sell at the upper end of the consolidation and to buy at the lower part of the consolidation. So for trading software, all right, automated trading software that are buying each time the CCI is oversold and selling each time the CCI is overbought, they should build a system in a way that, okay, is only in place when we have, okay, a balanced market or a consolidation. Or if you are a new trader that is always selling when the CCI is overbought and always buying when the CCI is oversold, I recommend to you to pay attention to the consolidation pattern. That's the time when one can buy, sell here, buy here, using the oversold and overbought CCI indicator. In the previous video that I recorded also about the RSI indicator, I said to traders, look for 3 points, okay, at least 3 points, either 2 points here, okay, and 1 point here, or 2 points up here and 1 point down here. All right, so you can see that I have 2 points up here, probably touch it here, and I have 1 point here. So if I have a 3 point here, I'm looking to sell, I'm looking to buy. I want it to come here to retest it. So I have 2 points here, 1 point here, and when the price comes here for the 3rd time to touch the lower part, this is a bullish trade setup, okay? Again, we'll apply the top-down trading method, multiple time frame trading method, or the trading drill without violating the market pattern and paying attention to the economy news. Again, here it is, all right? Breaks, common center is broken. 2 point up, 1 point low is retesting the lower part. The CCI is oversold below the level of minus 100. As you can see here, it's below minus 100. All right. Common center is broken. This is a bearish. This is a bullish trade setup. All right. We use a top-down trading method, okay, to participate in this trade. The first target, if we buy at the lower part of the channel, the first minimum target is the median line of the channel. You do not have to close the trade. You may move your stop loss to break even or secure your gain and let it run if you don't want to take profit at the median line and allow it to continue to go up to the upper end of the channel. Remember, if the price is going up from the lower part of the channel, it does not guarantee that the price will definitely reach the upper side of the channel. That's why we say to trader the minimum target is the median line. One can secure gains or even take profit or move, stop to break even and manage the trade carefully until you reach the upper side, all right? Because it's not guaranteed that it probably go up there. Okay, it makes sense? The opposite is also true when we have here, we did not have a 2 point here. Suppose we have 2 point here, which we probably touch it here and pull back here. So we have 2 point here. Suppose, okay, we have 2 point here, and the price start going up. So we have, you understand? Because I don't have that scenario here in this example. So here, 2 point here. Suppose we have 2 point here and 1 point here. So if the price start going up, okay, start going up, and boom, it reaches the upper side of the channel. All right, this is a bearish trade setup. Okay, the CCI is overbought above the level of positive 100. All right, we wait for the common central line to be broken. This is okay. You see, normally one should see the price run too fast. Sometimes if the candle that is breaking the common central line went too fast, you see, you need to be careful. Why? Because sometimes the price will go fast. You see, this candle here, how it close be fast below the common center line. See, I don't like this. I'll go away because it's a lot of volatility. You see, it slowed down, okay, and it just didn't go down very fast. So when you see it go too fast like this, the candle that is breaking the trend line go too fast, you may stay away from it. If you want to trade it, be gentle, okay? This is one typical example here. See, it went too fast, okay? Which means trader spotted it, they sold it big time. You don't want to be the last person selling. You want to be the first person or at least the third person selling, okay? I prefer to be the third person selling, not the first person to sell, all right? So, CCI is overbought. The market pattern is horizontal. Suppose we have 2 points here. It came here. It's a bearish trade setup. We can sell. So if the price is going down, we prefer it to go all the way to the lower part of the channel before retesting the upper. See here it did not come all the way here. You see, so it was kind of didn't go all the way here. Came back again to retest it here. You need to be careful. The reason is didn't go all the way down here. Now it just changed direction here. The bearish momentum is not very strong. If you are taking this one here, you need to be very careful. All right? So again, to filter out false signal in this case, use the common central line on your trade setup time frame. We're on a monthly chart of Altera Corporation. I'm using a monthly chart here. This strategy is valid on an hourly chart, 30-minute chart, 50-minute chart, 5-minute chart, any time frame. All right? All right? So we want a common central line to be broken. All right, common central line here to be broken. So you see here, so you touch it here, you draw your common central line, see you touch, you pull back to retest, the common central line went back up, and then before this candle closed, this is better now, okay? So after this candle here is closed, we have a bearish trade setup. We will use a top-down trading method, or as soon as it touches here, we drop it down to the signal time frame, wait for signal, and go to the entry time frame. Though you can see here the CCI was not overbought, but we are not trading the CCI, was not overbought, but the price was overbought. So if you have been watching this series of videos, part 1 to part 5 so far, you understand that we have already talked about this, so I will not go into a detail about this scenario. So step 1 to 6, one will be able to master the CCI indicator. So the best overbought and oversold CCI occur in a horizontal market pattern in a consolidation period. We are looking for 2 point up and 1 point low, or 2 point low, 1 point up, and we want the common central line to be broken, and we use a top-down trading method, okay, on the edge. Sometimes the CCI may not reach the overbought zone, but the asset itself will be overbought. In that case, we can look for opportunity to sell or to buy. So in this scenario, we are looking for opportunity to sell on the upper side of the consolidation, and we are looking for opportunity to buy on the lower part of the consolidation. So buy, sell, buy, sell, buy, sell, using oversold and overbought CCI in the horizontal channel. But you can see here, as the price pull back again to retest this point, this is again a bearish setup, okay? Yes or no? But it's not, this bearish setup was not ready. Why it was not ready? Because why? The common center line was not broken. That's why this is how we use it. The common center line allow us. So you see here, it's a bearish setup that was not completed. Price just continued to go up nicely. You see, break below. You see here, this one went too fast. That's why I said you slow down. This one closed nicely, and then we implement. Or we use another time frame as our trading setup time frame instead of the monthly time frame if we don't want to wait for this candle to close below the common center line. See here? So traders who are trading like old-fashioned traders just sell. Yeah, it's the sell. CCI is overbought. It's well above. It's 176. It's definitely going to go down. In fact, when the CCI is quite high, it's still that the bullish momentum is strong. So here, you will draw your warning line, which is the top of the consolidation. What the price has done, it break above and retest. Well, we will buy instead. At this point, you should know how to do that. So it's break above, retest. CCI is overbought, is pointing to us a resistance zone. But if the price break above the resistance level and find a support, it's a buy. Here it was a buy. Break above, retest with the red candle here, this candle here. After that, well, we apply the top-down trading method. Boom, 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 boom. People are busy selling here. The reason why the price running too fast is because their stop loss are taken out. And these traders are violating the market pattern. Look at the market pattern. It's a rising channel, yes or no? Why, in the name of God, all right, this is to make you laugh a bit, should one, okay, be forcing it like this, violating the market pattern? You remember what I said? In order to achieve consistent winning trade, one must not violate the market pattern on any time frame. On the setter time frame, do not violate it. On the signal time frame, do not violate it. On the entry time frame, do not violate the market pattern. And the price going up while the CCI was overbought. It makes sense? Another thing I want to point here to traders is that you can see when I was explaining to you the reasons why we have the consolidation market, all right? You can see that the price went down fast, okay? You see this kind of volatility, pew, pew. This is in year 2000, the tech bubble, all right? So, pew, pew, going down fast, volatility wild in this session here, okay? And then this is a normal place, so you want to verify well, what is causing, okay, so when you see the consolidation market pattern, you want to ask yourself, what is the reason, okay, we have a consolidation? So I explained to you 3 reasons, so you should know why, okay? So in fact, there is a combination of reasons here. There was a high volatility first, and also the price was at what? Okay, at key levels. Okay, you see this is a resistance here, price breakable, retested here. That was the beginning of the bullish trend. Pew, 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 up. It's a key level, this line that I draw now. So what has happened, the price went all the way up here and then came back to that key level again and then just slowing down. So the market was acknowledging this horizontal key level. At the same time, the volatility was getting quiet. So this is a combination of 2 reasons why we have a consolidation market pattern. Okay? All right? Blah, 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 blah. Sometimes there are another reason also, talking about the fundamentals, the management, okay? Because usually you will see some stock will stuck in the consolidation for a long time. We have seen that for Cisco. We have seen that also for Microsoft recently. When the management, there's no more innovation taking place. And we are in the same place every year. No innovation, nothing special. And the market is not prepared to push it up, and you have also a consolidation. There are many reasons for consolidation. I may be recording another video when I will explain the subject of consolidation. All right. So this is the end of this video. Okay, this series of videos about learning to master the CCI step 1. we were talking in step 1 about roll and deviate roll, okay, the roll of the CCI, deviation for specific moving average, and we focus also on the center line. In the step 2, we were talking about oversold, overbought, and the correlation between the CCI and the Bollinger Bands. In step 3, we were talking about, okay, the overbought, meaning that the price at resistance zone, support, oversold, meaning that the price at a support zone. In step 4, we were talking about, okay, the rising channel, the oversold in the rising channel. In step 5, we were talking about overbought in the declining channel. And in step 6, we are now talking about the consolidation, when we can buy and sell when the CCI is overbought and when the CCI is oversold. And we will also talk now in step 6 about okay, the meaning of the consolidation, the reason why we have the consolidation, and when we are trading okay, the overbought and oversold CCI in a consolidation, in a balanced market, we want to look, if you want to sell, we want 2 points at the lower part. This is the condition: 2 point, 1, 2, and 2 points at the base and 1 point at the top. So it goes up again to touch the top. Then this is a bearish trade setup. Common center line must be taken out. Okay? After that, if it comes back down and returns it again, as here, common center is broken, this again is sell. The first one is this. So the first time we start selling, this is it. 1, 2, 3. And then we wait for it to touch it here. After that, if we touch it, we apply the top-down trading method. Here again, it did not. You see here, it didn't break the common center line. And we can buy instead without forcing it. If you want to buy, 2 points at the top, okay, you remember, okay, 2 points at the top and 1 point at the base, okay, all right, and we want it to pull back to retest the lower channel, the lower part of the channel, and the common center line is broken. This is a trading, this is a bullish trade setup, a bullish trade setup. This is not the signal. If you see this on the 4-hour chart, that will be your trade setup on the 4-hour chart. If you see on the hourly chart, that will be your trade setup. We can use the top-down trading method on any time frame, even on a 50-minute chart. We can break it down: 50-minute chart, 5-minute chart, 3-minute chart. Okay, all right. We can break it down: hourly chart, okay, hourly chart, 50-minute chart, 5-minute chart. Okay, we can go daily chart, hourly chart, 10-minute chart, or 5-minute chart. Break it down. We can break it down any time frame. Use the top-down trading method and pay attention to the column menu. Ladies and gentlemen, this is the end of this series of videos about learn to master the CCI indicator. These are essential videos, a package for day traders and swing traders who want to learn to master the commodity channel index indicator or the CCI indicator, and to avoid CCI trading mistakes. At the end of this series of videos, one will be able to know exactly when to sell when the CCI is overbought, and when to buy when the CCI is overbought, and when to buy when the CCI is oversold, and when to sell when the CCI is overbought. One will also understand in this video when to buy even if the CCI is overbought, and when to sell even though the CCI is oversold. All right, one will be able to filter out the false signal and understand the correlation between the CCI and the Bollinger Band, and the role of the CCI, okay, measuring a deviation from a specific moving average. So there is a lot of theory about the CCI indicator on the web. What we do care about at Dayprotraders.com, we want to teach traders the practical part about knowing, okay, opening a chart and find a setup and trade it properly using the top-down trading method without violating the market pattern. So I recommend to somebody who wants to master the CCI towards step 1 to step 6, one at a time, no rush. And if it doesn't make any sense, put a comment below, ask a question, all right? And take it gently, okay? And okay, you will definitely improve your CCI trading, all right? If you like this video, please give us the thumbs up, okay? If you dislike it, please give us the thumbs down, okay? But put a comment below why you disagree with us, okay? But if you truly love it, feel free to share it on Google+, on Twitter, on Facebook, on any other, okay, social website. If you are mad and love it too much this, you can even embed it on your website, okay? This is so important for other traders, so we are sharing so other traders also can learn from it, so we may have an orderly market. Feel free to subscribe to our channel, Dayprotraders channel, and also to our website, daypro.com. Until the next time, enjoy yourself and be very happy. We are the CCI Pro Traders talking about learn to master the CCI step 6. Happy trading to you all, and speak to you soon.